Good morning, investors. You are now on KleverStock with me, Ainunjaria, serving you the latest morning bell updates. Kicking it off with the opening bell updates on our local market. The IPM KLCI opened firmer after the long weekend, but slipped into the red in early trade as investors balanced corporate earnings against broader macroeconomic signals. At 9:17 a.m., the benchmark index fell 3.1 points or 0.2%. to 1,572.02, it had opened 1.74 points higher at 1,576.86. Among the top decliners, CIMB dropped 21 cents to 7 ringgit and 22 cents. Hong Leong Industries fell 20 cents to 13 ringgit and 68 cents. Hong Leong Bank slid 18 cents to 19 ringgit and 90 cents, and PPB Group lost 16 cents to 9 ringgit and 19 cents. Now, on the upside, Nestle rose 62 cents to 94 ringgit and 94 cents. Malaysian Pacific Industries gained 40 cents to 27 ringgit and 26 cents. Kuala Lumpur Kapong climbed 30 cents to 19 ringgit and 98 cents, while Petronas Dagangan added 26 cents to 21 ringgit and 44 cents. Berjaya Research Senior Berhad said investor focus is now shifting to key macroeconomic data and policy signals as the latest corporate earnings season wraps up. All eyes are on Bank Negara's overnight policy rate decision due this Thursday, while optimism over a potential U.S. Federal Reserve rate cut is expected to shape sentiment moving into September. Now, Berjaya Research added that while a dovish stance from the Fed could support regional equities by improving liquidity and boosting risk appetite, persistent foreign outflows and uncertainty over global trade policies may continue to weigh on gains. It expects the local market to stay largely directionless in this holiday-shortened trading week, with near-term support seen at 1,560 and 1,550 points, while resistance is pegged at 1,588 points and the 1,600 psychological level. It also noted that sentiment remains subdued after a weaker than expected earnings season, with a consolidation phase carrying a downward bias likely among lower liners. Rakuten Trade, however, struck a more positive tone, expecting a swift rebound. It said the market undertone remains strong and forecast the index to hover in the 1,575 to 1,590 range today. We should now look at the performance of our local currency. The ringgit opened higher this Tuesday but is expected to trade cautiously as traders look ahead to Bank Negara Malaysia's Monetary Policy Committee meeting on Thursday and the United States non-farm payrolls report on Friday. At 8 a.m., the local note rose to 4.2205 against 4.2300 compared with last Friday's close of 4.2230 against 4.2275. Bank Muamalah Malaysia Berhad Chief Economist Dr. Muhammad Nizam Abdul Rashid said he expects Bank Negara to maintain the overnight policy rate at 2.75%, noting that the central bank has already delivered a preemptive cut and the degree of monetary policy accommodation is sufficient to support growth. He stressed that markets will be paying close attention to Bank Negara's latest assessment of the economy and its prospects. Globally, the University of Michigan Consumer Sentiment Index fell more than expected to 58.2 points in August, missing consensus estimates of 58.6 points. The index has averaged 59.8 points in the first 8 months of this year, compared to 73.0 points in the same period last year, showing that U.S. consumers have grown more cautious. Nizam pointed out that the non-farm payrolls data will be a key barometer for the Federal Reserve's decision on September 17, especially after the significant downward revision in June and May. Consensus estimates have placed non-farm payrolls at 74,000 in August, slightly higher than July's 73,000. He added that the ringgit could trade between the 4.21 and 4.22 today as the US dollar shows continued signs of depreciation. At the same time, the ringgit opened mixed against other major currencies. It strengthened against Japanese yen to 2.869 or 2.8758, but weakened against euro to 4.9443 or 4.9554. It also eased against the British pound to 5.7171 or 5.7300. The ringgit was mostly lower against regional currencies. It depreciated against the Indonesian rupiah to 257.0 or 257.7, fell against the Singapore dollar to 3.2875 or 3.2952, and slipped against the Thai baht to 13.0601 or 13.0976. However, the local note firmed against the Philippine peso to 7.37 or 7.40. And now moving on to local economic updates. LBS Bina Group Berhad has secured development rights for a massive 8.3 billion ringgit residential project in Kuala Damansara, a move its leadership says will be a game-changing catalyst for the company. Group Executive Chairman Tan Sri Lim Hock San said the project strengthens LBS Bina's foothold in the Klang Valley while expanding and diversifying its property portfolio. He called the project a strategic extension of the company's long-term growth and land bank optimization strategy. The new project, awarded by Kuasa Land Sdn Bhd, a wholly owned subsidiary of the Employees Provident Fund, will see LBS Bina's unit, LBS Kuasa Damansara Sdn Bhd, take exclusive rights to progressively develop 77.83 hectares across 11 freehold parcels within the township. The plan involves building 2,922 residential units featuring a mix of low and mid-rise condominiums and landed homes, alongside integrated infrastructure and amenities. The development will be carried out in phases over 14 years, beginning in 2027. Public Investment Bank, which is upbeat on the deal, highlighted that the 10 progressive payment terms over 10 years will allow LBS Bina to fund later phases with profits from earlier ones. It noted that the acquisition price works out to roughly 15% of the project's gross development value of 8.3 billion ringgit, describing it as fair and unlikely to overly strain LBS Bina's balance sheet. Public Invest is keeping its earnings forecast unchanged for now and has reiterated its outperform call with an unchanged target price of 67 cents for the stock. Tan Sri Lim said the Kuasa Damansara project not only allow LBS Bina to continue delivering landed homes, which remain its core strength, but also opens the door to the high-end segment, a market long targeted for expansion. He added that the development is aligned with current demand in the Klang Valley and will benefit from connectivity through the Kuasa Damansara MRT station. He also pointed to improving conditions in the property sector following Bank Negara's recent 25 basis point cut in the overnight policy rate to 2.75%. Lim said the lower rate is expected to lift property buyer sentiment and reduce financing costs for developers. He stressed that regardless of the interest rate environment, LBS Bina remains committed to launching projects that deliver value to both customers and stakeholders. And now moving on to corporate news updates. Padini Holdings Berhad is showing resilience despite reporting its weakest quarterly earnings for the fourth quarter ended June 30th, 2025. Analysts at CIMB Research say Padini's value for money positioning allows it to capture consumer downtrading demand, supported by continued product extensions including activewear and collaborations with IP brands to enhance its appeal. CIMB is keeping its earnings per share forecast for financial years 2026 to 2028 unchanged, maintaining a buy call with a target price of 2 ringgit and 48 cents. It highlighted Padini as a key beneficiary of consumer downtrading, citing its mass market focus, resilient earnings and strong fundamentals. At its financial year 2025 results briefing, Padini attributed the revenue weakness to the earlier timing of Ramadan in 2025, which pulled festive sales into the third quarter. This resulted in negative same-store sales growth of 12.9% year-on-year. Looking ahead, Padini has not committed to firm expansion targets, saying new store openings will depend on location suitability and commercial viability. CIMB, however, factors in 7 net new stores per year in its financial year 2026 to financial year 2028 forecast. The group also shared that fewer than 5 of its 160 stores are currently loss-making. On the regulatory front, Padini confirmed that all its stores are now subject to the 8% sales service tax on leasing services, which is expected to add between 10 billion ringgit and 20 billion ringgit in annual cost. Now, to offset these rising costs, Padini is focusing on improving margins through a stronger sales mix, tied to cost efficiencies and warehouse automation to reduce workforce reliance. Management also noted that a stronger ringgit against the yuan could ease input cost pressures, with gross profit margins projected to stay in the 36 to 40% range for the financial year 2026. And finally, wrapping up, we have major corporate developments and deals across Malaysia. Petronas posted a 24% year-on-year drop in revenue to 132.6 billion ringgit and 19% drop in profit after tax to 26.2 billion ringgit in the first quarter as a result of the weaker pricing power. NextG has secured a letter of award from the Home Affairs Ministry to supply Malaysian international passports with a ceiling value of 1.728 billion ringgit, premised on an estimated product of the 3 million units per year for 6 years. Next, Econpile's wholly owned subsidiary, Econpile Amsterdam Berhad, has secured a 23.46 million ringgit construction contract from Matrix Concepts Central Sdn Berhad. CCB's wholly owned subsidiary, Crescendo Developments Sdn Berhad, has entered into a conditional agreement to sell a 50.06 hectare industrial land in Bandar Cemerlang Industrial Park, Johor to MS Fusion Sdn Berhad for 263.21 million ringgit. And last but not least, B Corp's fourth quarter 2025 net loss widened to 207.2 million ringgit from 152.5 million ringgit a year earlier, hit by non-cash impairments, while revenue slipped 3.8% to 2.37 billion ringgit on weaker retail, services and property contributions. Now that's a wrap for Morning Bell Updates with me, Ainun Jara on KleverStock. Thank you for choosing us, investors. Stay tuned for the next live coming soon.